Thinking about buying your first house in 2026? It probably feels like a huge, maybe even impossible goal. You see the headlines, you hear the stories, and it's easy to get discouraged. Eh? But what if I told you that with a smart plan, buying your first home in 2 years is totally achievable? Forget the panic and the confusion. In this video, I'm going to break down the exact 3-step roadmap you need. How to create a realistic budget, how to supercharge your savings, and how to get qualified for a mortgage. By the end of this, you won't just be dreaming about homeownership. You'll have a concrete action plan to make it happen. Let's get started. First things first, let's talk about the elephant in the room, the budget. This isn't just about cutting back on lattes. It's about understanding exactly where your money is going and where it needs to go. The first step is to track your spending. For 1 month, track every single dollar. Use an app, a spreadsheet, or just a notebook. You'll be shocked at what you find. This isn't about judging yourself. It's about gathering data. Once you have a clear picture, you can create a home buying budget. So, what does this budget look like? We need to figure out your target numbers. Let's start with the down payment. While 20% is the traditional advice to avoid private mortgage insurance or PMI, it's not the only option. Many conventional loans allow as little as 3% down, and FHA loans require just 3.5%. Let's say you're aiming for a $350,000 house. 5% down payment would be $17,500. This might sound like a lot, but broken down over 24 months, it's about $730 a month. That feels more manageable, right? But the down payment isn't the only cost. You also need to budget for closing costs. These are the fees for services that finalize the real estate transaction, like appraisals, title insurance, and attorney fees. A good rule of thumb is to budget 2% to 5% of the home's purchase price for closing costs. On that $350,000 house, that's another $7,000 to $17,500. So, your total savings goal for the down payment and closing costs could be anywhere from $24,500 to $35,000. Now we have a real target. Your budget's job is to find the monthly savings needed to hit that target in 2 years. This brings us to our second major step, supercharging your savings. Now that you know your monthly savings goal, how do you actually find that money? This is where your spending tracker comes in handy. Look for the leaks in your budget. You spending a lot on subscriptions you don't use? Dining out more than you realized? These are your first targets. I'm not saying you have to live like a monk, but small, consistent changes add up big time. Maybe you can reduce your dining out budget by $200 a month and cancel a few streaming services for another $50. That $250 a month, or $6,000 over 2 years, just from a few tweaks. Next, automate your savings. This is the single most powerful savings hack. Set up an automatic transfer from your checking account to a separate high-yield savings account every payday. When the money is out of sight, you're less tempted to spend it. Treat your savings like any other bill that has to be paid. Pay yourself first. A high-yield savings account is crucial because it lets your money work for you. The interest rates are much higher than a traditional savings account, so your nest egg grows faster without you doing anything extra. Another way to boost your savings is to increase your income. I know, easier said than done, but hear me out. A 2-year timeline gives you plenty of opportunity. Could you pick up a freelance gig in your field? A part-time weekend job? Sell items you no longer need? Even an extra $300 a month from a side hustle is $7,200 over 2 years? That could cover your entire closing costs? Think about your skills and hobbies. Can you tutor, pet sit, or do graphic design? Every extra dollar you earn is a dollar that can be funneled directly into your home fund. Combine cutting expenses with increasing income, and you'll hit your savings goal even faster. Okay, so you're budgeting like a pro, and your savings account is growing. The third and final step is getting qualified. This is all about making yourself look like an amazing, reliable borrower to lenders. The biggest factor here is your credit score. Lenders use this 3-digit number to predict how likely you are to pay back your loan. A higher score means you're seen as less risky, which gets you better interest rates. A lower rate can save you tens of thousands of dollars over the life of your loan. So, how do you improve your credit score? First, get a copy of your credit report from all 3 bureaus, Equifax, Experian, and TransUnion. You can do this for free. Check for any errors and dispute them immediately. The most important thing you can do is pay all your bills on time, every time. Payment history is the biggest component of your credit score. If you have any late payments, get current and stay current. Next, focus on your credit utilization ratio. This is the amount of credit you're using compared to your total credit limit. Another key part of qualifying is your debt-to-income ratio, or DTI. This is your total monthly debt payments like car loans, student loans, and credit card payments divided by your gross monthly income. Lenders want to see that you have enough cash flow to comfortably handle a mortgage payment on top of your existing debts. Most lenders look for a DTI of 43% or less. So paying down your debts not only helps your credit score, it also improves your DTI. This is another reason why that side hustle can be so powerful. Increasing your income lowers your DTI ratio. Let's put it all together. By 2026, you can absolutely be in a position to buy your first home. It starts today. Your mission for this month is to track your spending and calculate your savings goal. Figure out what a 5% down payment plus 3% for closing costs looks like for a starter home in your area. Then, create a plan. Identify 3 expenses you can cut and 1 way you can potentially increase your income. Check your credit score and start taking steps to improve it. This process isn't about sacrifice, it's about strategy. It's about taking control of your financial future and making a plan for the life you want. 2 years is a marathon, not a sprint. There will be ups and downs, but if you stay consistent with your budget, your savings, and your credit management, you will cross that finish line and get the keys to your very own home. You can do this. Thank you so much for watching. I hope this roadmap gives you the confidence and the tools to start your home buying journey. If you found this video helpful, please give it a big thumbs up. Hit that subscribe button and ring the notification bell so you don't miss our future videos. Most importantly, I want to hear from you. Drop a comment below and tell me what your biggest question or fear is about buying a house. Let's support each other in the comments. Thanks again for watching, and I'll see you in the next video.